Hey trader, Stephen Quitzel here with TradersPlan.com, shooting this at the close, after the close on Thursday, May the 12th. Let's look at the overall market, then let's look at some potential ETFs that are setting up. So I want to start with the S&P 500. I mean, we are getting really stretched to the downside. I do think it seems reasonable we're due for a relief rally. Every time the market, S&P 500, or even the NASDAQ gets, about approximately 9-10% away from the 50-day moving average, it tends to snap back, right? So right here it got about 7-9% away, and then it snapped back. Same thing right here, and right now as of the close on Thursday, it's 9.4% away from the 50-day moving average. Doesn't mean it can't keep dropping, but it's getting pretty stretched. So I'm kind of hoping we get a snapback rally at least for a few days. The NASDAQ did finish positive on the day on Thursday, had a daily reversal bar, but a lot of daily reversals in a nasty trend like this, they do fail. But, for the NASDAQ, I'm looking at this. This is 14% below the 50-day moving average. That is a steep drop. And as of so far, this whole bear market that we're in, I think the NASDAQ is down around 25-26% year to date. This is the furthest stretch it has gotten away from those key lines. So kind of hoping that we really get a relief rally right here. So, there is not a ton of really strength in the market, but let's look at what did really pop on Thursday. You had a lot of these ARK ETFs, and man, they have gotten absolutely hit very hard. They're full of just, everything from Bitcoin to Coinbase, electric vehicles, just a lot of really risk on stuff in there. And it was up 5.8% on Thursday. This is a whopping 32% away from the 50-day moving average, and this is a basket of stocks. Now, this isn't quite like an index, right? The market can pop and this can go down based on what's inside it, but I think if we go risk on, this could, relief rally 10-15% easy, but I would wait and see, make sure the market doesn't open Friday pretty ugly. If this low gets taken out, any stops need to be hit on that. So that is a more of a risky play, but it really could snap back, and it could snap back hard. If we look at what is really strong on the current week, in last week's video, I talked about, I think it was right here, I talked about like wheat is really sitting on this 50-day moving average. I understand that it's went up a lot, right? Kind of pulled back and consolidated, but was sitting on this 50-day moving average. I said that's a pretty good buy if you like this, and it went up. It got hit pretty hard on Monday, but it is, really charging higher. So this, I mean, it seems reasonable that this is about to, this is a breakout right here. You can call this kind of a very volatile cup with handle pattern right there. So that looks pretty good. Hopefully you took my advice and bought it last week. Agriculture has really popped this week. Not up a ton, but then again, not much is. Corn came back. It's been on a run, tested the 50-day moving average early in the week and bounced off that. So, that could have been a potential good play, and it might even still be in play. We'll see if it pulls back. It's about 6% above the 50-day moving average, so that's probably where I put my stop loss. See if you can kind of get a play up here, and if it gets really steep to the upside, this is kind of one of those situations where I would probably sell into strength. A lot of other stuff in the top 10 for the week. If you kind of look, you have bonds and they're just bouncing off the lows, and we definitely could get a bounce right here, but I don't see anything as of yet, so I'm kind of keeping an eye on it. The dollar has gone absolutely crazy, so it's interesting. We're in an inflationary environment, and everybody talks about gold is a great inflation hedge. Well, gold has not been a great inflation hedge during this inflation cycle because the dollar is getting so strong. That's not good for us. Eventually, this will pull back, but I think this is just a great example of anything can happen. You have inflation and you don't have gold. What's really popping in this inflationary environment is agriculture and energy. So that's why you always want to pay attention. You got this DBA ETF, or this is actually an ETN, but It's really pulled back, but if this kind of moves back above 22, 22, 25, kind of breaks out of this downtrend, I think it seems reasonable that that uptrend will resume. So that's probably not a bad spot to look at right here. So, so far, really the best things that have bounced this week are wheat. So we're looking at wheat, we're looking at corn, we're looking at agriculture, and some of the ARC ETFs. If we go back, we're really looking, a lot of risk on stuff was really popping on Thursday. Everything from the IPO market, and even you have some home construction in here. These are really, really ugly charts. So when, you play these bounces, you have to understand that, the odds are not great. You have big upside, but you have a low win ratio potential because usually reversals and downtrends don't work, right? Just like negative reversals in uptrends don't work, right? Because you're going against the trend, even if it's just on a 1-day bar. You had cloud computing that is really, really sold off. And, a couple months ago, I thought this was looking good. It looked like it was going to break out and get out of here, and then just absolutely got hit. So a lot of tech stocks are really, really looking opportunistic, but we got to show some signs of relief rally. So it's okay to sit this one out. It's okay to wait a few extra days to make sure that a rally is underway. And if you're kind of curious, well, how do I do that? Maybe you wait, if you're looking at the S&P 500, wait for the market to move back above the 20-day moving average, which is really the rally line. Let it move back above there because you have so many false rallies. Like you have a false rally right here. You have all these kind of false rallies that have failed. They last 2, 3, 4 days, and then they just roll over. If you give it a little bit of extra confirmation, let it move above that 20-day moving average, or let the 8-day move above the 20. That's a little extra confirmation to really help out your trade. So I hope this was helpful. Let me know if you have any questions.